Walmart, among the first big U.S. retailers reporting fourth-quarter earnings this morning. There is some concern that tariffs on cheap goods from China, India, Mexico, and Canada could threaten Walmart's bargain-priced approach. Joining me now is Potomac Wealth Advisors founder and president Mark Avallone. Mark, good to see you. Thanks so much for being here. What are your expectations, and how do you assess this picture right now?
Well, good morning. And Walmart, on a company-specific level, is very interesting because they've managed to do what a lot of companies haven't been able to do. They remain loyal to their core customer, and yet they have brought on affluent traffic into their stores, which has helped their earnings. Last year, the stock was up over 80%, and we look to see them as a model for a company that can navigate tariffs, can navigate a changing consumer preference, and this immigration crackdown. So I think Walmart could be an outlier in how they handle it. Look, to be sure, what people need to think about with tariffs is they're still in place. There's a bit of hysteria whenever the president talks about tariffs, but some of his tariffs from 2018 are still in force, and the Biden administration did add tariffs, and they're still in force. So companies have continued to do well. I think what we want to see with the tariff rollout is more of a smooth rollout, somewhat balanced. I know there'll be a big stick out of the White House, but tariffs in and of themselves are not toxic. The economy is operating with them. We need some of them to even out these trade imbalances, and some companies will continue to do well with them if they're rolled out in a prudent manner.
I mean, I wonder if we're going to hear some of that sentiment from Walmart guidance for 2025. It's got to be looking at tariffs right now and thinking, how does that change the dynamic for us to be able to offer the lowest price possible on goods?
Yeah. And they do. What Walmart has that other companies don't have is they have very strong relationships with their vendors and very dominant relationships with their vendors. So Walmart does have that power. They have volume. They're ultimately going to be where people impacted by imported goods want to still distribute their product. We don't see Walmart as one of the weaker players as a result of this. So I think second and third tier players across the board are where a higher cost strain impacts them. I'm not saying Walmart's going to have another 80% year, because that could have been a once in a generation move for them as a result of they've been integrating AI, they're advertising, Walmart Plus, they're hitting on all cylinders, and companies just don't get to do that all the time. But we think the larger players in each segment will be able to handle the impact of tariffs better than the also-rans, and that's where I think the focus is going to be.
Let's check yields, and the 10-year now sitting at 4.5%. The January Federal Reserve minutes revealed officials are still concerned about the inflationary impact of the potential of inflation from President Trump's trade and immigration proposals. Mark, are you worried about any of these new policies in terms of rekindling the inflationary fears?
Well, that's a great question. I think what we should have been worried about were the inflation potential from $3 trillion spending bills that we had the past few years. Those were massive. They were in short order. They all passed within 2 years of each other. And that's why we saw the massive, one of the biggest reasons we saw the massive inflation. The other points about tariffs and immigration are legitimate, but I think they can be absorbed. Look, immigration does lower wage costs. A supply of anything lowers the price. That's the truth. But we needed to do something with regulating the border, and I think in the short run, a slowing immigration could slightly put some wage pressure on, but in the long run, it has some other benefits. Tariffs, similar. Tariffs are going to either raise costs or reduce profits, or maybe a balance of both. But it could be incremental. All the Fed was really saying is we are not going to be out there with a policy either way until we get more clarity. They didn't say either policy was bad. They just said they want to pause to get some clarity before making a move on rates.